So our strategy for today is the pin bar strategy. So the most important question is, what is a pin bar? So with a pin bar, it is also known as a hammer or a shooting star. Uh, so when you want to identify this pin bar, it is important for you guys to know that you need to use a candlestick chart. So with most professional traders, they normally use a candlestick chart because it shows price action easily. So in most financial markets, you'll be able to have access to the candlestick pattern. So with a pin bar, the characteristics are that it has a long tail or a wick with a small body, and this small body is normally located near the bottom or the top of the candle. The tail or the wick of the pin bar, it represents the price rejection. So basically, this is what we call a pin bar, a candle with a small body and a long wick. So we have two types of pin bars. We have the bearish pin bar, which is the shooting star, and we also have the bullish pin bar, which is the hammer. So these are the two types of pin bars that we have. What are the key features of a pin bar? How do we identify? How do we know that this is a pin bar? What are the features do we look at? So the first one is the length of the wick must be 3 times the length of the body. Yes, so that means the tail or the wick must be longer. It must be longer, at least 3 times than the length of the body of the candle. So that's the first feature. Then, secondly, the body of the candle, it must be located near the low. So we are talking about a bearish pin bar, the red one. So the body must be located near the low. Then with the bullish pin bar, the one with the green head, it must be located near the high. So that's another important factor to discuss. Then, number three, the nose must be small. So that means the nose, which is below the body, if you're talking about a bearish pin bar or a bullish pin bar, it will be above. So let's first of all talk about the bearish pin bar. With the bearish pin bar, the nose will be located at the near the candle low. So it must be small. Then with the bullish pin bar, the nose must be located above the body, and it must be small. Number four, which is our last feature, the long tail or the wick, it must stick out from the surrounding candles. This is very important. With pin bars, the wick must stick out from the surrounding candles. So these features, they help us to identify and to validate if it's a pin bar or not. Let's look at the formation of a pin bar. So let's take, for example, for the past uh, 3 days, the market was bullish. And when the candle opened today, there was more momentum as the price was approaching a level of resistance. Then uh, during the day, the bears step into the market and they took over from the bulls, and the market closed below the resistance, and we end up having a shooting star, which is an example of a pin bar. Or maybe uh, there was a bearish impulsive move when the market was approaching a support, and during the day there was more momentum for the price to move down. But before the day closes, the bulls, they stepped into the market, and they took over control from the bears, and then a pin bar was formed. So basically, this is how pin bars are formed. So let's talk about the psychology behind the pin bar. What is the psychology behind the pin bar? Because in most cases, we have different types of candlesticks. And there are a lot. If you go on YouTube, people will be talking about a lot of pin bars. So with a lot of candlesticks. But with a pin bar, it's a simple candlestick pattern. And with this one, it normally denotes or it indicates a possible price reversal. So let's look at why is it when most people notice or they identify a pin buy in the market. Why is it they normally think of a possible price reversal? What is the psychology behind that? The psychology behind the pin bar price reversal is that it represents a significant shift in the market sentiment. When we talk about the market sentiment, we are talking about the feeling or the attitude that traders or investors have towards a particular asset or what, or uh, asset or what, or currency. Probably are trading currency. What is the feeling of the what of the traders or the investors in that what market? So there is now a shift in market sentiment. When the pin bar forms, it indicates that the price attempted to move in one direction but was rejected and reversed in the opposite direction, resulting in a long wick in a small body. This shift in sentiment can be a result of several factors, such as the buyers or the sellers stepping in. A pin bar can indicate that the buyers and sellers are stepping into the market and are starting to push the price in the opposite direction, like what I highlighted when we talked about the formation of a pin bar. It can also mean that there is now exhaustion of the previous trend. So the previous trend is losing steam. The previous trend is now coming to an end. A pin bar can also indicate that the previous trend is losing momentum and may come to an end. This is due to the profit taking or a lack of buyers or sellers. Market uncertainty. A pin bar can also indicate that the market is uncertain about the direction of the trend and traders are testing the waters before committing to a new trend. So this is the reason or the psychology behind a pin bar. Okay, so let's look at the most important reason why we are here. What are these two pin bar strategies? So this is the first part of the series that we're gonna be having in this channel. So I'm gonna introduce two pin bar strategies, and in my next video, I'll also introduce another two. So the first one that we're gonna be talking about is uh, support and resistance. Okay, so let's first of all talk about support. So on support, we want to look for a hammer candle or a pin bar. A hammer candle or a pin bar. This is what we are looking for. So as the market was coming down and there is now an appearance of a what? Of a hammer candle on a level of support. So when you have noticed that, you wait. The first thing that you're gonna do, this is the most mistake that amateur traders normally make. Before the candle is completed its formation, while it's still in the process of forming, they say, it's a what? It's a pin bar. I saw this on YouTube. Let me quickly what? Buy. You wait first for the following. One, it has to be on the level of support. Then it also must have the characteristics or the features that we talked about. A long wick, the board near the what? The in this case, we're talking about the hammer. The board must be near the high of the candle, and the nose must be small. And then once you have noticed that, you then wait. You're not going to instantly what? Enter the market. You wait for the market to what? The candle to close. Then when the candle closes, you're going to use a buy stop. You're not going to buy immediately. So you're going to make use of a buy stop. Okay, on my channel, I made a video where I was talking about different market orders. I also talked about sell limit, buy stops, um, sell stops, buy limits, all those different market orders that we have. So in this case, we will not buy instantly. We're going to make use of what we call a buy stop. So this buy stop is going to be placed above the nose of the of our hammer candle. So where are we going to place our stop loss? The stop loss is going to be placed one below there is the support level, and also it is also going to be placed below the wick of the pin bar or the hammer candle. So let me quickly repeat on that. The first thing, we're gonna make use of a buy stop. It has to be above the nose of the candle. Then for our stop loss, it has to be below the wick of the candle. So we are done. So how are we going to take our profit? We're gonna make use of the recent swing. So we can make use of ratios. We can make use of a risk to reward ratio of 1 is to what? 1.5 or 1 is to 2. So we can make use of ratios, or we can make use of a recent swing. So we target our recent swing. Then when the price reaches that swing, In this case, it will be a swing high. Then we quickly take our profit. So let's talk about resistance. So with resistance, we are looking for a shooting star. The body of the candle now, it has to be near the low of the candle. So one, you have verified that this is a what? A valid pin bar. One, the wick is what? Sticking out from the surrounding candles. The body is small. The wick is also 3 times the length of the what? Size of the body. And the nose is also small. Then you wait for the candle to close. Then you're not going to enter the market instantly. You're going to wait you're going to use a what? A sell stop. So on resistance, we will make use of what we call a sell stop. It has to be just below the nose. Because why are we using buy stops and sell stops? Sometimes the market might, after the appearance of a shooting star, it might also go up, maybe to be a double tweezer or a double pin bar. It will try to also go and make a retest of the what? Of the resistance. So if you enter the market instantly, you will face some loss, and sometimes it will be very stressful, and also what? Frustrating, just for the when you have entered and the price is what? In a loss. So it's wiser for you to use a sell stop, because the price would have now gained momentum to move up and to move down. So this is what is very important. So you make use of your sell stop just below the what? The nose. And then for our stop loss, we're going to place it above the what? The wick of our shooting star. Then for the take profit targets, we can make use of a risk or of our risk to reward ratio of 1 to 1.5 or 1 to 2. Or we can target the recent what? Swing low. So this is how we're going to be making use of this what? Strategy. So this is the first strategy, which is our support and resistance. So in our next strategy, we're going to be making use of something that is different. We'll make use of what we call a Fibonacci retracement uh, levels. So with a Fibonacci retracement levels, so if there is a what? An impulsive bearish bullish move, we'll stretch it from the swing low to the swing high. Then the most important levels that we're going to be focusing on, we have 3 important levels. The first one is 61.2, the next one is 50.0, and the next one is 38.2. Those are the 3 most important what? Levels. So you wait for the price to reach that level. So with the Fibonacci retracement 2, we want to wait for the pullback. You know that when price is moving up, it doesn't move in a straight line. It makes this zigzag. So when it has made the first impulsive move, so we are talking about a bullish impulsive move. So you wait, you stretch your Fibonacci from the what? From the low to the high. Then you stretch your Fibonacci to your what? To your right hand side. Then you wait for the price to reach these 3 levels: the 38.2, the 50.0, and the 61.8. So the market will make a pullback, and these levels, they act like strong support and what? And resistance. So basically, this is what you're doing. You're waiting for the end of the pullback, because you don't know when is this pullback going to what? To end. So making use of the Fibonacci retracement levels, these 3 levels, we'll ignore the 23.6. So we'll only make use of the what? The 38.2, the 50.0, and the 61.8. Those are the most important strong support levels that we'll make use of. So you wait. So you wait for the what? For the price to what? To give you a rejection on those levels. Sign of rejection, we've talked about the pin bar. So if the pin bar now appears on these levels, you know that there is now a possibility of the price moving up. So where are you going to place your stop loss? So your stop loss has to be below the 61.8, because there are chances that price can actually retrace and reach that 61.8 level. But if price falls below that, you know that now the market is now reversing. There is no continuation. It's no longer a retracement, but it's now a reversal. So you wait one for the appearance of a what? A hammer candle. In this case, we are talking about a retracement where there's an impulsive, bullish impulsive move. So you wait for a hammer candle. once the hammer candle has appeared, you wait now. You're gonna make use of a buy stop where you place it above the nose, and then your stop loss is gonna be below the level 61.8. For your profit target, you just target the previous swing high, the recent swing high. So in our case, it was at that point where we have our take profit. So, or you can make use of what ratios, where you'll be using what a risk to reward ratio of 1 is to what of 1 is to 1.5 or 1 is to 2. So you make use of those ratios. So we're looking at an example where we had a bullish impulsive move. Let's look at an example where we have a bearish impulsive move, where there's a downtrend. We're talking about an uptrend. We're going to look at how we're going to be using the Fibonacci when we have a downtrend and we're waiting for these pullbacks. The same thing. So we're gonna insert our Fibonacci retracement tool. Then we'll stretch it from the swing high to the swing low. We extend it to our right. Make sure it's there on the swing high and swing low. Then you extend it to your right. Then you wait for our important level, which is 38.2, 50.0, and 61.8. Then you wait for price to make a pullback. When the price approaches those levels, if there is an appearance of a shooting star, which is a pin bar, we talked about that, you are going to wait for that pin bar to close, and you are going to make use of a sell stop, which you're going to place just below the nose of the candle. Then for your stop loss, you're going to place it above 61.8. As simple as that. So in a downtrend, you make use of the swing high. So this is important. This is where some people normally get there are some people who were requesting, how do we make use of a Fibonacci? So if the market is moving down, you take it from the highest point and you stretch it to the lowest point. Then you just drag your Fibonacci to your right. So you wait for the market to make a retracement or a pullback, and it must reach these levels, 38.2, 50.0, and 61.8. Then you wait for the appearance of a pin bar. Then you put your sell stop and your stop loss. A stop loss is a must. Then for your profit target, we'll target the following.
Our risk to reward ratio will be 1 to 1.5 or 1 to 2, or we can simply target the recent swing low. These strategies are effective and profitable when trading currencies, cryptocurrency, stock, and Deriv synthetic indices because price action remain relatively consistent in most financial markets. If you have found value in the information shared, please kindly like, subscribe, and comment. We are giving away a free pin bar detector indicator. Click the link in the description to join our WhatsApp and Telegram group, where you will also receive free trading robots and indicators. Bye-bye for now. See you in my next video, where I will share another 2 profitable pin bar strategies.